Okay, so here is our UNH position. We have a short put spread, a credit put spread that we put on a couple days ago that expires next week. Okay, we did this when the stock was much lower. I think the stock was right around 456 or so when we did this. Right now, the stock is above our short strike, as we can see here. Okay, but we still have a week plus to go until expiration. So we sold this for a 250 credit. It's now trading roughly $1.90, $1.95 or so. If this was next Friday at expiration, guys, and the stock was right here, what would be the value of this position? Good. Um, Gary, why 250? Pat's got the perfect explanation. All those other answers are right. Pat's got the perfect explanation. Both puts, both options are out of the money. They're both going to be zero. Okay, so Gary, you're looking at P&L. My question was, what would be the value of the position? The P&L would be 250, full credit, keep the premium. Okay, but why is it trading for $1.95 right now if next Friday at expiration it would be worth zero? What's the $1.95 all about? Yeah, it's all premium. It's all extrinsic value. It's all time value. Exactly. Okay. So what happens to premium? What happens to extrinsic value, time value over time? It goes lower and lower and lower and lower because every option at expiration is either worthless if it's out of the money or it's worth its intrinsic value. There's no premium left at expiration. So we kind of touched on this yesterday as well, but what would cause this $1.90, $1.95 of premium extrinsic value that's in there right now to start decreasing and dwindle down to zero? Okay, the theta is the amount that the extrinsic value or the premium erodes on a daily basis. So that would cause it. So basically, Robert, the passage of time, right? Very good. Sandup's got the other one. If the stock, and Bill, if the stock moves higher, that's going to cause the value of the position to go down as well. Okay, so two things we're looking for in this position to get to our potential, let's say we wanted to take half of this off, buy half back for $1.25. We need 70 cents to get there. How are we going to capture that 70 cents? One or both of these properties that you guys are talking about right now. Passage of time and or stock moving higher. Obviously a combination of that. If the stock moves higher and we get to next Monday, Tuesday, Wednesday, whatever it is, that's going to be the best scenario. But either one of those will contribute to the value of this spread going lower and lower and lower and lower. Does everybody understand that? No fills, Rich, on SE yet. Any questions on this, our position, this example in UNH with reference to either the passage of time, theta, or that if the stock moves higher, the value is going to come down a bit? So on Thinkorswim, Bill, and I'll show it to you, you can get the Greeks on there. Let me populate it up here. So here's Thinkorswim. And so if we look at this position, the April 12th, we can see I have populated now with all the Greeks up here, and you can customize however you want. There's the theta of those options. Okay, but what I don't necessarily like about the Thinkorswim platform, and maybe there's a way to do it, I just don't know an easy way to do it, as opposed to what I have on my live vol platform, is I can populate the risk chart here in my live vol. Okay, and this is just going to break down real easy for me all of the Greeks right here, and I can see the theta of 2 cents right now. Okay, so we're still 8 days away. This thing's only going to lose a couple pennies due to time decay right now. But if I accelerate, what I can do here is change the date ahead here. Let's say I change it to Monday. Okay, push the date ahead 4 days. That theta doubled. And if I put it to Tuesday and Wednesday, right, you can see it accelerating, and that's one of the properties of theta, of premium decay, is that it's not linear. Theta decay does not happen the same amount every single day. It's not linear. The closer and closer and closer we get to expiration, the more the theta impacts the value of the spread. So you kind of see theta decay kind of like this, and then as we get closer to expiration, boom, it accelerates. Does everybody understand that? You are very welcome. Okay. All right, everybody. Let me wrap that up. Let me get the video posted up in the room here. Robert, you're very welcome. And I will be right back.